Good afternoon. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Monday, the 3rd of February, 2020, and it's 12:45 p.m., and you're going to say, Ira, why aren't you waiting to the end of the day? And the real reason is you're looking at about the settlement prices. Remember, they settle in the gold and the other metals at 12:30 p.m. Central Time. So I'm 15 minutes after that. You're going to be right in this neighborhood. So you got to ask yourself, all of a sudden, why is gold down when we're looking at markets where the coronavirus is still a pandemic for all purposes? Remember, the difference between an epidemic and a pandemic, local versus worldwide. That's really the difference. Energy prices just taking a beating, as you can see. Coffee prices, if you're watching, they've been falling almost every day. And, if you put two and two together, it's not hard to see it. If Starbucks has closed, thousands of stores in China, what about local merchants? They probably are closed too. Why? Nobody's on the streets and less demand for these goods. And that's what we're facing. So a little bit of caution here. Market's starting to talk already. Is the Fed going to have the markets back if needed? And I think that's certainly the case, but we're not there yet. But the market is starting to price in by September. Now, that's a long way off. Another rate cut. So just to give you what the scenarios look like. Now, as we take a look at a weekly chart of gold, the market is backing off. As you can see, we're down $7 so far. What the market has done, and I think I've pointed this out every time I can on the daily chart, this was missile day. This is when Iran fired the missiles at the U.S., as you know, in Iraq. The market has climbed back into that range, but it hasn't been able to do anything about it. And today you have what's called an outside day down. That means you took out the previous day's high and low, and you closed lower on the day. That doesn't break the trend just yet. You still very much have the pattern of higher lows and certainly higher highs. So it's a pullback. You could go into a stall if the market takes out 1567.90, because that would break this pattern of higher lows and higher highs. Support in the market comes in just a tad over that in the neighborhood of the 1570 level. Getting back over today's high would be an interesting feat, because if you take out the high of an outside day down, I call that a bear trap if it's done within the next two trading sessions. So that would be either on Tuesday or Wednesday, regardless if the market breaks down first or not. Where's the resistance? Well, if you don't see it, I don't know how much more I can pound it into your head. Bollinger Band is the first resistance point. Now, I have others. I have window envelopes and the like, but on this particular show, which is our YouTube version, that is your resistance point. The odds of staying over a Bollinger Band are 5% of the time. And you're always looking, what is the pattern as you're attacking it? The market is paying attention to that and not willing to give ground just yet, which puts the support of the 18-day average very much into question here. Could the market suddenly turn bearish? Might be a better question off of this. And I'm going to answer that as no, not on this pattern. Why? No matter what happens, you have a higher high. And even if you got under 1567.90, you'd have a higher high, lower low. That's not a trend trading pattern. What about momentum? Do you need me to tell you more? You're overbought, and this was on Friday. You attacked again the Bollinger Band. You either are going to punch through it and just run, and if you don't, be careful. Each time you hit these bands, especially if you lose momentum like you did here, or first getting overbought, it's a resistance point, and that's what you're facing. Now, when we look at gold versus silver, you can still see silver. As long as this line's climbing, you need more silver to get an ounce of gold. Therefore, when you take a look at this chart, what's the pattern? It's bearish right now. You have lower highs, lower lows. You've hit the first support zone, which is the 100-day average of closes. And if you need proof that that's worked, just visually go back and look on your chart to see what happened. And right now, that's what the market's looking at. Being support is not a turn of a trend. It's a support zone. The secondary support, 1749.60. The bears grabbed control of the market, and I'll repeat, an outside day, if you take out Today's high, be it on Tuesday or Wednesday, I'll call that a bear trap. Until then, the bears have grabbed control of this market. In the copper market, if you can tell the world when the factories in China are going to reopen, that will probably end this decline in the copper. You're into important areas near the 250 level, which is an important zone from just a psychological point of view. I've heard that the factories may open February 8th, 9th, 10th. Then I've heard that in certain areas they may not open at all. They may have to delay it. And while Apple keeps saying everything's fine, they'll have their phones, well, not if these factories get delays in key areas. That is not quite the case. Foxconn, as an example, has said, yeah, it's got Vietnam and other areas where it's making these phone products, but it's also counting that when the factories here open, they're going to be able to make up some time, here being in China. Well, what if they don't open? So you're getting that world push on this. This is no different than coffee. You don't need the copper if the factories aren't open. The good news, we all know that. It happened during the Lunar New Year, but now you're into getting back to normal time, and each day that you're not using the product, well, that weighs on it. Platinum made its run for the lower Bollinger Band. Whether it hits it or not, can't answer. You're oversold, you've come down pretty hard, and the market was able to turn back and close higher. You may have seen the end of that break. That's not the start of a bullish move. It might be the end of a bear move on that market. And in the Palladium market, tell me the number that the market just likes to be over. It's that 18-day average of closes. Now, could this market turn bullish on you? Yeah. If you take out here the 2258 level, you could end up with higher lows, a higher high back over the 18-day average, putting back into play the potential to get up to the Bollinger Band top. What about the US dollar index? Well, to me, the neutral number is right here at 97.38. What I call the line in the sand. It was backed up with the 100-day average at 97.35.5. So the market hit it. Now let me just show you. This is Friday's action. Market hit it. It hit it again today. It's turned back up. Is the trend of the market up? It is. You still have a pattern of higher lows and higher highs. Support here, where the market turns on you, is if you take out 97.16.5, because that could give you the potential of wherever you end up with this high, a lower high, unless that one's taken out, and then a lower low after this big run-up. Just hearing talk about lower interest rates should weigh on this, but as we know, the dollar's getting a bid from what? Fear. The coronavirus fear is giving that market the bid. You see a bid in the bonds, not quite in the notes at this point in time. You see the energies under a lot of sell pressure at this point. You're just seeing how these markets are working out and unable to hold up. It's that simple. So with that, friends, I'm Ira Epstein. You have yourselves a good day. I do want to tell you, though, if you like the technical work we do here, you should sign up and get our Guide to Technical Indicators, Volumes 1 and 2, is put out by our good friends at Futures Magazine Modern Trader. It'll teach you the chart patterns. It's about 23 pages in each of the volumes. Each one in full color explains the different indicators that are out there, how to use them. It's a nice, short tutorial right in front of you. We made it a PDF so you can print it out right on your printer. You've got it. You can read it on your computer screen. It's part of our free offerings. If you go to our website at www.iraepstein.com, that's where you'll find all this. You can always call my staff. They'll send it out to you right away. In the meantime, I'm Ira.